When you're looking to buy a home, it might seem like there's an overwhelming amount of information out there, and it can be hard to digest it all. The U of I Community Credit Union is sponsoring today's segment to help debunk some mortgage myths. And here today are Sherry Shannon and Danny Hadeen. Thank you so much for joining me.
Thanks for having us.
All right, so tell me a little bit about the credit union.
Well, we are a full-service financial institution. We've been in this community for over 90 years. We also have branches in McLean County and Vermilion County. So if you're watching, you can bank with us.
And I always, I didn't realize until I worked there that credit unions are community nonprofits. And so I'm really proud to work for that organization.
Yeah, and it seems like do more good is your rally cry.
It is.
But it also is truly a part of your mission, and everyone who I've met so far from the credit union seems to live and breathe that. So that's really nice that you practice what you preach.
Yeah,
I drink the Kool-Aid.
Yeah, we do.
Exactly. And then Danny, you're kind of the mortgage expert, and I know today we are going to talk about HELOC loans, which I don't know a lot about. So can you give us sort of the quick overview?
Yeah, so a lot of folks are kind of already in their dream home, but they still need to use the equity in their home to finance a project or consolidate their debt. With a home equity line of credit, you can add basically a credit limit on top of your first mortgage without messing with it, and then you have a low interest way to finance your other goals in life.
That's great. So ultimately it's something that can sort of work in tandem with your first mortgage but without messing with it in any way.
Exactly. And because it's a line of credit instead of a loan itself, you're only charged on what you're actually using, kind of like a credit card.
Oh, okay. That's really convenient. So essentially you don't have to commit to X amount in debt, you just say what you might possibly need and then you're charged kind of as you use it.
Exactly. And
Nice.
after you pay down what you're thinking of when you apply, like your new patio or college or whatever it is, it becomes available again, and then you have another project on the horizon.
So it's just there whenever you need it.
Exactly.
And I think you brought a trivia question for me, right?
Yes.
So what is this trivia question? Do we have, I think we have a graphic for that. Maybe? Here it is. All right. So what is a HELOC? Is it a second mortgage, a high efficiency lending over capital, or He-Man's cousin? I like that. I like those ones. They're just like, is a HELOC He-Man's cousin? I'm guessing it's not that one. And based on what you've already shared with me, I think I'm going to guess that it is a second mortgage.
Yeah, exactly. It's a type of a second mortgage, but a limit rather than a bulk sum.
Right. Okay. There we go. And I got it right.
Perfect.
Wonderful. And then we also have a myth versus fact, right? Because there are some myths that people don't fully understand what that is.
I believe so.
Let's see what our myth is for the day. A HELOC changes my first mortgage. Well, that you've also explained. See, I like it when we do it this way because then I can get the answers correct.
We're setting you up for success.
As we play the game, exactly. Do more
that's what we do.
Yes, we're doing more good.
You've taught me things. All right, so I'm guessing it is. It does not affect my first mortgage.
Absolutely.
Right.
It just settles on top of it like frosting on a cake.
Oh, perfect.
Oh, I like
That's
that.
a really
that's
good way to look at. Did you just come up with that right now?
I am the expert.
It's true. We should give you more credit, right? And then who qualifies for one of these mortgages? And in addition to that, who is it recommended for?
So I'd recommend it for pretty much anybody. Because it's secured, the interest rates are going to beat anything that it would be competing with, like a credit card or a consolidation loan. To qualify, you just have to be able to qualify for membership and own your home within Illinois. It does have to be your primary residence as well. So if you have any equity, there's a chance we can get you approved to finance your financial goals that way.
And why would somebody want to go this route versus, say, taking a second mortgage or any other mortgage option?
Well, compared to a loan, the line of credit is a little more flexible because you can spend again, as we discussed. It's going to be a lower rate than pretty much anything other than a mortgage or a vehicle loan, but of course that equity is already spoken for.
Sure.
And I believe that's it.
One thing that I like to talk about is that you might have a great rate on your first mortgage right now, and so refinancing that, you may not want to lose that great rate. And so especially, if you've got it several years ago before mortgage rates started increasing, and you're like, oh, I really want to take advantage of the equity in my home because I want to do XYZ. So a HELOC is a great way to take advantage of your equity, leaving your first mortgage alone at that really great interest rate. And then the HELOC, again, has a lower interest rate than a personal loan or a credit card.
It should be mentioned also, rates have been declining since September last year, and we're hoping they'll decline again over the weekend. So the variable rate on the HELOC will take advantage of that without you having to do anything extra. It just keeps getting better in this current environment.
Exactly. So if you already have a HELOC,
exactly.
You know, for instance, I've had mine for years. And,
okay.
You know, I'll use it and pay it off, and
yeah.
I'll use it and pay it off. And so I love it because it's there instead of using a credit card, right? And that high interest. And the rate does change. As our rate environment changes, so does the interest rate on my loan. So
better and better.
Yeah, it sounds
Great
like
option.
It's just benefit after benefit after benefit.
Yeah.
it really is.
I think a lot of people just don't realize it's an option, and that's what holds them back from taking advantage.
Right. Yeah, and I feel like it's really good for debt consolidation and just to...
It really is. You know, as a financial coach, Jaclyn, one of the things I like to look at first when I'm working with a coaching client is, do you own your home?
Right.
And if so, let's look at the equity in your home to pay off some of that high interest debt versus a personal loan, which is going to come at a higher interest rate because there's no collateral securing it. So when a financial institution can secure a loan like that with your home, then of course that rate's going to be lower, and you're going to pay it off faster because you're at a lower interest rate.
Right, exactly. Well, thank you both so much for being here and for sponsoring our segment today and sharing all of this information, because I feel like this is one of those programs that a lot of people don't fully understand what it is.
Happy to help.
Absolutely.
Yeah,
Thank
this
you.
is really helpful.